Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss how volatility markets are pricing in more certainty and a faster resolution of the election result. And Phil, here we are a week from today, and it's going to be a big day.
Yeah, and the betting markets in terms of the odds of who's going to win the presidential election really haven't changed that much for a good 2 or 3 weeks. So it's interesting how they've held up given the chances of any new news are sort of falling as we get closer and closer to the actual date, especially with the record levels of early voting that are being recorded.
So if we take a look at our first chart here, courtesy of PredictIt, it doesn't look as if there's been much movement in terms of Biden or Trump. It seems to be pretty steady. It's almost consolidation. Look, if you want to take it from a technical analysis perspective.
Yeah, and even the amount of betting, you can look at the volume bars underneath, has actually fallen. So it almost looks like there was a flurry of activity sort of early October around when Trump got coronavirus, and that's now kind of subsided a little bit as well.
If we take a look at our second slide, this is a VIX futures contract, and we talk about how volatility markets are pricing in an election, and it looks as if that has subsided a bit too in terms of how much volatility was expected.
Yeah, we need to be a bit careful with this chart, I think, because when you get days like yesterday, you get parallel shifts in the whole curve. And in reality, if we're looking out sort of March, April next year, having an expected VIX above 27 is still pretty high. So this is still showing there's a fair bit of uncertainty out 5-6 months. But what is interesting is compared to almost 4 weeks ago, we've got a parallel shift down. So that if all other things are equal, would actually say the market is starting to feel more confident about the election in terms of which direction. At least it will be resolved, and it's going to be less volatile in that sort of period around November, December than we were thinking a month ago.
And if we look at our next chart from PredictIt, this is a blue wave, meaning it goes to the White House, Senate, and House would all become Democrats.
Yeah, and I guess we just talked about how the volume had subsided on who's going to be president, but you can see here in that same time period at the very end, the volume has picked up on this betting, and as it picked up, you could see. I guess it's all happened during this period of the SCOTUS confirmation as well, the Supreme Court. It actually looks like the probability of a blue wave fell until the last couple of days, and it's kind of bounced straight back on a pretty strong amount of volume. So the idea of using betting odds is that if you look at the theory of wisdom of crowds, any expert is probably not as accurate as a group. And so betting odds are usually pretty good predictors of what's going to happen.
And to wrap up here, if we take a look at other markets, of course, the equity markets, and believe it or not, we are in the thick of earnings season. I mean, Phil, on Thursday, we have 35% of the Nasdaq 100 reporting. How have the results been so far?
I mean, the results so far have actually been really quite good. In terms of the proportion of companies that are beating estimates, it's been really high, although the amount of the beats has been relatively low. So, it's kind of similar to a lot of the economic data that we've been seeing. It's a lot less bad than we thought it would be. Because obviously the level of earnings is still below a year ago levels for most companies. But what's interesting is what the market's doing when the companies beat and miss. And at the moment, when a company beats, it's hardly going up at all. But when a company misses, you can see in the chart today, it's getting punished much more than normal. So it almost looks like the companies themselves are doing a lot less bad than people thought, but the market's pretty critical of anything that they're hearing about the future. And that might sign the fact that there's a lot of headwinds ahead. We know that coronavirus is picking up again. We know that typically makes consumers button down and sort of change their behavior. So the winter could be pretty tough.
All right, Phil, thanks for joining us on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.